Hello and welcome. This is the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Agam Vakil. Here are the headlines. It's another weak start to the trading day, and the Nifty looks for support at the 100 DMA of 11,500. Banking and FMCG stocks are leading the losses. An open interest has surged in Container Corporation and REC as traders take fresh short positions in their respective futures. Titan is the top loser on the Nifty, falling the most since November 2016 after a subdued first quarter update. And TCS will report its first quarter numbers post-market hours today. The stock is trading with cuts of close to 2%. Now let's take a look at the futures and options markets. And of course, as far as the Nifty is concerned, we certainly are looking at an extension of the losses that we've seen over the previous few days. In fact, marking the third straight day of losses and now trending comfortably below the mark of 11,500. We have seen an increase of open interest of around 5.5% today towards shorts, and the picture isn't any different from what we have been used to over the past couple of days. Let's pull out the banking Nifty futures too. It's very much the same, about 0.5% cut here on the spot price, and of course the open interest has increased by as much as 3.3%. The India Volatility Index is what I do want to talk about, considering it is perhaps for the first time in 2.5 weeks, where we saw a rise yesterday, which is up around 6%. It is about 0.5% higher today as well, but still failing to climb the mark of 14 so far. So far, so good for the wicks as well as the markets, of course, however, are not looking as stable, considering there is a further drop there. But let's talk about options too, and if we can actually look at the way their options are panning out, I suspect there will be a little more writing around the lower level calls. Of course, this is your maximum open interest, which does indicate a 500-point range, but as you can see, it's the 12,000 call, which is now firmly in place with the one with the maximum open interest. On the lower end, it seems fairly open right now, considering we have seen unwinding in the 11,500 put as well, and that was a level that we did see max OI, even though it does indicate that it does have max OI, but you never know where we're going from here. And that brings me to the next part where we are looking at further writing, not at 11,900 or 12,000. We are now looking at writing around the 11,500, 11,600 and 11,700 calls, which clearly does indicate that the range, at least in the near term, is shifting downwards. And as you can see, 11,200 is where we are keeping an eye on in terms of the open interest build-up in puts. So that's as far as the markets are concerned in terms of the setup. Let's also look at the stocks which are seeing an increase or a decrease in open interest. Which of these stocks are actually seeing a considerable, big change? So we do have something like a Gale, along with the Titan Company, and we'll talk about Titan Company a little more. In fact, it's trading at day's lows, if I'm not mistaken. It's down 13% now. REC, Container Corp, Colgate-Palmolive, all of them are looking at substantial losses in today's day of trade and a surge in open interest, which means that there are fresh shorts into the system. As far as stocks which are going into unwinding concern, let's bring that up as well. And we are keeping an eye on something like an NIT Technologies, also a Max Financial, GMR Infra. But again, it's not so much about unwinding today as much as it's about, fresh shorts, a continuation of the trend that we saw over, yesterday and perhaps the second half of last Friday. That said, let's take a look at stocks that we want to address on our show today. The first one right at the top is, of course, Titan Company, because on the back of, the severe weakness that we've seen in the company. We're also keeping an eye on Yes Bank. Well, perhaps a buck in trend. You never know. Is this a short covering, or is this a change in trend? We're going to ask our experts on this. And of course, Container Corp. Heavy volumes coming through, and in fact, it's not only declined today, but it's also seen a sharp drop yesterday. So, it's actually breached some of its crucial daily moving averages. So we'll be watching out for that one as well as we move into trade today. On that note, we get in our guests. on the show. But here's a reminder, if you have any queries regarding futures and options markets, you can call us on 022-454-04141, or of course, write to us on Twitter, Facebook and YouTube with the AskBQ hashtag. Let's get in our experts for the day then. We have Nirav Chheda of Nirmal Securities and Amit Shah of BoB Capital Markets joining us on the show. Good morning to both of you and thanks for taking the time out. Amit, as usual, let's go with you. The sentiment certainly seems to have changed. How are you reading trends?
Good morning, Agam. So definitely what we have seen is the most disturbing part right now in last 3 days has been the intensity of the fall in the market, and that has been quite steeper. If we see yesterday, we started on a gap down note, and the two of the important supports, which is the 50-day moving average, which is falling at around 11,750 odd, 720 odd, and the support what we had seen during the June series, which was overlapped multiple times, which was at 11,600.
Right.
Both these supports were taken off quite sharply with development on the negative sentiment on the option side as well, where we saw some close to around 13 lakh shares were added at 11,000 strike, 11,700 strike call option. And even the maximum put writers on a monthly contract had moved lower from 11,500 to 11,300 with just a slight rise in the open interest compared to 11,500 odd strike. So with this all negative development plus the open interest rise since the inception of the July series on Nifty future, which is mainly on the short side, the open interest is hovering above slightly 2 crore to 2 crore 5 lakh odd mark.
Sure.
The base was started around 1 crore 90 odd lakh shares. So definitely there is some short traction. The most disturbing is the intensity of the fall in the market, which is violating all these key support levels. Now, what next? On the upside now, 11,600 to 11,650 will continue to act as a stiff resistance zone for the market, which was earlier as a support. So the shift of polarity has happened in the market. And the more it sustains below 11,600, the more possibility of Nifty heading towards 11,400 to 11,350 levels. Now, during the exit poll outcome, we had seen a strong gap up start. So since yesterday, the market has started to fill those gaps. And that gap is completed around 11,425 odd levels. So that would be the key support level to watch out for. If it breaks that, then I believe there can be more pain towards 11,100 levels.
Okay, well, yesterday's support is today's resistance. That's the word coming in. But Nirav, good morning to you as well. Are your observations similar? How are you tracking markets here on?
Yeah. See, good morning, Agam. Yes, again, very, very important to note here that the PCR has come down below 1. It's come down to 0.88. That does mean, a little bit of oversold territory, but, the PCR can stay at 0.88 for a longer period of time. Having said that, very important level of 11,800, 820 was broken, and then as my colleague said, that gap formation between 11,440 and about 11,600. Now Nifty's come down to 11,500, is in the process of filling the gap. So again, I do feel Nifty will come down from here. Add to that on the technical parameters, there has been an RSI divergence that I've been talking about from the last few weeks, on the longer term charts, and it is starting to play out. So the first confirmation for the same has come in. Nifty is also broken below the 50-day moving average, which was placed around the 11,600 odd levels as well. So, all in all, the intensity of the fall, looking at the stocks, while coming here, I had taken out IndiGo as a sell call, and in a 10-minute period, the target was achieved. Again, when I've given another call on Bata, again the target has been achieved in the last 10 minutes. So that intensity of the fall in the stocks is very painful at this moment. Even on the index front, a lot of selling which is happening. Looks like we are going to go down further. There's not going to be any respite at this moment. So one should be selling Nifty at current levels. And on rise, now stiff resistance lies around the 11,600, 640 band. So one can keep a stop loss of 11,640 odd, on the futures, and goes for a sell with a target of 11,400 and 11,350.
Okay, Nirav, but if I'm not mistaken, you're also buying a call. That is the 11,600 call?
No, I think I've given a 11,500 future sell. It was around 11,530 odd.
Okay, fair enough. Pardon me for that, Nirav. But Amit, you did say that it's a sell-on-rise market, and you're talking about around 11,600. That's the mark that you're keeping an eye on. So if you could give us your levels that you're working with as well.
Yeah. So I would be more comfortable because considering the risk to reward at this point of time, it is slightly on the unfavorable side.
Yeah.
So any range close to around 11,580 to 11,600 in case if the market shows some kind of a respite on the pullback side, that would be a comfortable range to look for a short. And on the upside, I'll keep a stop loss slightly above the resistance which I just spoke about at 11,650 odd. So I'll keep around 11,700, which is near to the 50-day moving average. And on the downside, as I said, I would expect levels close to around 11,420 to 11,400 levels on the lower side.
Okay, well, there you have it. Both our experts are, well, fairly, should I say, cautious as far as the markets are concerned. And, well, the bias is, of course, towards the negative. But let's talk about stocks. Well, I come back to you, Amit. What stocks are you looking at right now?
Yeah. So I have one long and one short idea. Well, I was very much comfortable with the power sector, and I continue to reiterate that this can be the space where we can see some outperformance in the coming time. CESC has seen a very good rollovers towards the July series. Slight marginal liquidation of longs was seen during this last couple of few days. So I believe still there is a good supportive action seen in the space. On the downside, it has very good support around 765 from where it reversed sharply. And even considering the today open interest rise, it is close to around 7% odd. I believe the stock is witnessing some kind of a strength, taking some supportive action on every decline.
Right.
The more it sustains above 780, I believe the momentum can be poised towards 820 levels on the higher side. Overall, I have been quite negative on the overall auto and auto ancillary space, and I believe Bosch can see some negative trend from here on. If I just give a broader perspective, the stock has been hovering in a lower band, making a lower top, lower bottom formation since September 14 odd. So I believe it has violated a key monthly support, which is falling around 16,800 to 16,500 odd.
Right.
And the more it sustains below 16,400 to 500 odd, the more selling pressure the stock can witness. On the downside, my immediate target towards this is towards 15,300 to 200. And on a positional front, the stock can head potentially towards 14,500.
Okay. All right, fair enough. Nirav, you did talk about Interglobe Aviation right now, considering it has already hit a target. You, well, alluded to briefly to Bata as well, but I reckon you have two shorts this morning. Can you tell us about them?
Yeah. See, the first one is a sell call on HDFC Limited. Looks like this stock has made its stop, around the 20 to 50 odd level. There is certain amount of selling pressure which has come in. It had just about broken out above the 2200 odd levels, and it has come down again, towards those levels. There is a lot of long unwinding which has gone in this stock. Also on a weekly parameter, the stock has given a negative signal with a negative divergence. So I do feel the stock can come down towards the 1950 1960 odd levels, so one can short the stock at current levels with a stop loss of 2250. At the time of giving the call, it was around 2220. So if it does come up, that can be a level to watch out for. You can even sell here, but the stop loss is a little higher. The targets for the same should be around 1960 odd. The second one was IndiGo, but in a 10-minute period it did hit the target. I changed that to Bata, but in the last 10 minutes again, there has been a 30-point downfall in Bata as well. So again, if Bata does come up towards the 1380, 1390 odd levels, it is a good level to short at. See, the basic premise of finding these stocks was, I was looking for stocks which have been making new highs for a period of about 6 months to 1 year, where they've been witnessing a lot of buying. I feel, those stocks will be coming under severe selling pressure, and Bata was one of them. Bata also has a negative divergence, so definitely it is going to go down. It could not even break its previous stop, which was around the 1400, which was around the 1450 odd levels. So again, there is a double top kind of a formation as well. So that is a negative sign. It has broken below its 50-day moving average as well. So it can come down towards the 1300, 1250 odd level. So you do get, a little bit of rise in this stock. You can go for a sell here.
Okay, well, there you have it. Well, there's a lot of sell ideas coming in this morning, but there are some of them also getting triggered before we even get a chance to discuss them. Anyways, let's move in and talk about a few stocks that I want to address. And of course, right at the top is going to be Titan Company. Severe weakness. I don't think we've seen so much weakness in Titan in perhaps the last 3 years, if I'm not mistaken, because as I've already suggested, the last time we saw such a massive intraday drop, that too with a gap down, was in 2016. Now, to very briefly talk about it, the company has suggested 13% growth in its jewelry sales. If you consider any FMCG company out there, 13% growth is great. However, when it comes to Titan Company, because of the fact that the management has indicated over 20% growth for the entire financial year, the fact that they're looking at 13% growth in its jewelry segment, which means that it'll have to cover up substantially in the subsequent quarters, that is the quarter 2, 3, and 4. It's going to be a tough one, especially considering we are looking at severe weakness when it comes to the macroeconomic slowdown, of course, and that will, of course, have an impact on discretionary spending, and thereby impacting Titan's volumes too. That said, it's also, with today's fall, it's also fallen and again breached some very crucial daily moving averages. So it becomes very critical to address this one. And I'm sure a lot of traders out there will have long positions. So, Amit, let's take that one in mind. I'm sure a lot of them, not necessarily traders even investors, will be holding Titan Company. Firstly, how are you seeing trade pan out for this one, and what would your suggestion be for those who are long in this one?
Yeah. So overall, if I look at a longer term time frame, the stock is still in a bull trend.
Yeah.
It is just the intermediate correction which is happening, but this can be a good time bound correction. The disturbing is the gap down, the steep gap down what it has seen today, and the surge in the open interest, which is close to around 35%. So that definitely suggests that there has been an accumulated short position in the space, and also since yesterday we had seen some kind of a profit taking activity in Titan. So the overall, whenever the stock sees a sharp rise, so if I just have to highlight, during Jan 2017, the stock has run up from close to around 300 odd level to the recent high of 1340 odd levels.
Yep.
So whenever we see such kind of a sharp rise, we always tend to see some kind of a steep downside as well. Plus it asks for a price and time consolidation because the run-up was quite fast. So the Fibonacci comes into picture. To me, on the downside, 950 is the key support towards where the stock can test and spend some time around that. To me, it is more of a 6 to 8 months kind of a consolidation, where on the downside, 950 to the worst 830 odd levels can be seen in the space. This would be more of a time to price consolidation between this band in the coming 6 to 8 months time frame. So it is an avoid at this point of time. Definitely some of the investors who have the patience can wait for some time, wait for reversal opportunities in case they look for averaging these kind of stocks for the long ideas.
Right.
And even for the short traders at this point of time, the risk to reward will not make any sense. So it would be an avoid from a fresh trade perspective. From a holding perspective, someone who's holding from a longer tenure can be patient enough, can consider 950 as further more downside, which is 10% from here on. Exiting at this point of time also will not make any sense because the risk to reward also would be equated at 1:1 at this point of time.
Right.
So I would be patient enough, would wait for some time consolidation to happen and then take a fresh trade.
Okay, fair enough. All right. Well, I think we're going to take a moment to thank Nirav, considering he has to leave. So, Nirav, thank you so much for joining us and taking the time out and speak to us here. But let's move in from one Tata Group company to another, and let's address TCS because that's going to come up with the earnings too. Now, ahead of earnings, we usually see some amount of movement, but today it's a little stark. And let's not rule out the fact that there's been weakness across the globe too. Considering a lot of FIIs are invested in TCS, and TCS is something that's exposed to global markets more than Indian markets, considering it gets a majority of its revenues from the US and the Europe. But something that we need to take heed of as well. Now, it's week ahead of earnings, and we already addressed what we can expect. While revenues are expected to remain, I would say steady, there is going to be severe operational weakness ahead of our numbers. Again, Amit, how would you address TCS from here on ahead, before the earnings and possibly after them?
I feel it would be more of a sideways to down negative trend in the overall stock.
Right.
It has been hovering around its calendar year trendline support, which is joining the Jan, Feb and the May month low. Overall, we have seen some short built up in TCS as well as heavy short built up, which is in Nifty IT space, as the rupee has been appreciated quite strongly and it's now below 69 odd mark. So there is some softness in the overall IT space, and TCS had seen some outperformance earlier. I believe on the upside it will face multiple resistances, the immediate being and the stiff being at 20 to 20 odd. Till the time it doesn't cross and sustain above that, any upside towards that can be short-lived. On the downside, the next support and the key support is falling at 2080 to 2050 odd. On violating that, that can be for the weakness in the space.
Okay, well, because of paucity of time, I'm going to quickly move on and start taking queries from our viewers. And the first one is from Girish Kumar. He wants to know something about Balakrishna Industries. In fact, he wants to know if this is a good shorting candidate. Now, we all know that Balakrishna Industries has seen a lot of weakness of late. It's come off substantially. Today, it's not doing too much, of course, and there's very little change in OI in comparison to several other stocks in the broader markets. Currently at 715. Amit, would you short at these levels?
Definitely should go ahead. I have been quite negative on the overall auto and auto ancillary space, and this would have been my second best after Bosch to take a short position. The stock has seen an intense rise in the open interest on the short side. Since inception of July series, the open interest has surged to 24% odd, and it has given a false breakdown after crossing the 780 mark resistance zone. It has made a bull trap kind of a formation. On the upside, it will have a stiff resistance around 735 to 740. That can act as a resistance. On the downside, it can anticipate levels of 680 to 670.
Okay, and just one more query perhaps then. We have Sarang Patel, and he wants a view on RBL Bank futures. I reckon it may be tough to take a long call on this one, but let's check this out anyways. Let's see what is done over the last 1 month too. RBL Bank currently not doing too much. Again, very similar to Balakrishna Industries today. It's there hasn't been as much movement, or has there actually? 612 on the lower end and around 670 on the higher end. Actually, there has been a lot of weakness. I take it back. Yeah, Amit, how would you address this one?
So this is the first time the stock has made a lower top, lower bottom formation since making a high, which was during the May month at above 700 odd levels. So the recent high, which is around 655, 660, till the time it doesn't cross that, the more possibility the stock can trend again lower top, lower bottom formation.
Right.
On the downside, it has a key support at 610. On violating that, we can see some fresh weakness towards 570.
Okay, well, there you have it. Very quick look at the markets and see where they are currently trending. Again, what we're seeing is, more weakness. And in fact, some of your large cap stocks are now trending at, the intraday low. As is the case for the Nifty 50, which is down now another 0.8%. So there is a lot of volatility. I want to take a look at the India VIX as well and see where that one is and see whether or not there has been a further increase there, because that may tell you a little more. So it's moved back about the mark of 14. Of course, it's not as substantial as what we saw yesterday. And again, many may argue that 14 is not what we have been used to over the last several few months, but we must also remember that that was largely on account of some very, very big events lined up in the month of April, May, and June. That said, we're going to continue to keep a track on your option premiums too. And let's very quickly address your NSE 500 gainers and losers. If we can have that list, which will give you an idea about all the large cap and the mid cap companies which are actually doing well. So if you could have the gainers there you have Religare, Oil India, and Trent are advancing in trade. So all of them are up by as much as 4 to 6%. NLC India, of course, Yes Bank is making a little bit of a recovery here, and Bharat Electronics in terms of gainers. To talk about losers, however, and I'm sure there will be a lot more in terms of momentum. Titan Company is something that we've already addressed. REC is down another 9%. Again, a very active counter in the futures and options space. And Ballarpur, of course, that's a penny stock. You can disregard that for now. Container Corp, Jet Airways and Cox & Kings, among others. Of course, Cox & Kings and Jet Airways among the usual suspects now. Both, I suspect, are locked in a lower circuit of 5%. So, again, nothing new for these stocks, but there certainly is a severe weakness, and I'm sure the advanced decline ratio isn't helping at this point in time. On that note, I'm going to take a moment to thank Amit also for joining us and taking us through his views and solving some of our viewer queries. For more updates on the F&O space, you can check our website at bloombergquint.com, specifically the futures and options pages. And on that note, it's a wrap on this edition of the F&O Show. But for more news and updates, stay tuned to Bloomberg Quint Live.